Hey guys, and welcome to the Working Money channel. So we've got Crypto T here posting this $126,000 to $86,000 in 45 days. All right, look, I mean, it hasn't been fun. I guess now the question is, can this be reversed? Could we see the trend moving up to a complete reversal? How long is that going to take? And I think the bigger question is, will it be quicker than the downturn when we did see this liquidation event occur on October the 6th? So a bit of a timeline of events here. October the 6th, Bitcoin hits record highs of 126,272. I guess on every single exchange it's going to be different. October the 10th, Trump threatens 100% tariffs on China. Guys, that's when we started to see the cascading event. October the 10th, a record $19.2 billion was liquidated from cryptocurrency, and that was essentially the beginning of the end. We traded sideways for a little bit. October the 30th, U.S. and China trade deal occurred, and then we did see a bit of a move to the upside. November 3rd, crypto liquidation did resume, and November has just been bearish, despite all the technicals suggesting that we were going to see a bullish November. Of course, yesterday, November the 20th, if you guys are watching this video on the day that I'm releasing it, Bitcoin falls another 31% in 45 days. So what do we have on the charts today? Bitcoin moving down, altcoins going down. I guess we should probably talk about Bitcoin first. Currently, one Bitcoin is trading in and around $82,200 per coin. Now, guys, this is kind of the last option here, our last bastion of hope. If Bitcoin sweeps these lows and goes below $74,000, that is officially it. I think we can all call for a bear market. I think, at this point in time, a lot of people are already calling that. Blockchain Backer called it about 6 weeks ago when Bitcoin was still trading up near all-time high. Right now, we've got the retrace here for Bitcoin about 34.8, almost 35%. As of today, this has affected, of course, the entire market. Wow, I don't think I've ever seen, I think I've seen it at 8 or 9 at some point, but I was just going to say, I don't think I've ever seen extreme fear at 11. Pretty low right now, market cap $2.84 trillion. So now we are firmly below $3 trillion. It went down 8.81% in the last 24 hours. And look at that, Bitcoin down 10.5, Ethereum down 11.2. Now this is feeling more like bear market numbers here. XRP down 11.11. BNB coin is down 10.24. Solana down double digits. Most coins, guys, are down double digits. And so is this something we can recover from? Are we even in a period where recovery is possible? Guys, apparently we are. Apparently this is not the end, and I'm going to talk a little more about that today. Okay, so let's take a look at XRP right now. XRP falling like a sword. As you guys can see, XRP currently trading in and around $1.87. So we did actually go past that level, former level of resistance that we saw back in 2021. That was the localized top for XRP back in 2021, about $1.96. But XRP broke past that mark. Now we're trading at $1.87. I mean, there are some other levels here that we should pay attention to. I think the next one is $1.63. Right down in here, you guys can see for XRP, we did wick down to that level back in April. And again, the liquidation event had XRP wicking down to that level as well. And you guys can see here back as we were seeing the trend for XRP rising. Back in November of 2024, that was a top. So XRP did hit that level there, formed resistance, came back down, and then continued its trajectory to the upside. So now we're paying attention to this level here, $1.63. I think for XRP, if we get down below that, that's it for XRP. So for Bitcoin, it's 74,000. For XRP, $1.63. And so the other thing is the macro picture is not looking as good as it did 6 weeks ago when we thought the Fed was going to cut rates. Those odds have gone down, fueled by delayed job data and macro uncertainty. There's a few things here that are happening. Here's Jen Sanasi with the synopsis from CoinDesk.
The odds for a December Fed rate cut collapses to 30%, and Cathie Wood's ARK Invest buys the dip. You're watching CoinDesk Daily. I'm your host, Jen Sanasi. The probability of a Federal Reserve interest rate cut has nearly evaporated, dropping to a low of 29.8%. That's according to the CME's FedWatch tool. Just a month ago, traders were anticipating a 98% chance that the central bank would issue a 25 basis point cut. The polymarket contract on the Fed's December decision also slid to just 26%. The collapse in conviction comes as the Labor Department confirmed it will not release October jobs data due to the record-breaking government shutdown, leaving policymakers flying blind. Adding to the uncertainty, the October Fed meeting minutes revealed deep fissures among officials on whether to pause or cut rates. Despite the macro gloom, Bitcoin remains subdued, trading at around $90,000. Capitalizing on the dip, Cathie Wood's ARK Invest deployed $39.6 million into crypto equities as the broader market slid. The firm purchased $16.9 million in shares of Bullish, the owner of CoinDesk, $15.1 million in stablecoin issuer Circle, and $7.6 million in Bitmine Immersion Technologies, a major ETH accumulator led by Tom Lee. The buying spree coincided with a sharp correction in crypto stocks, with Circle and Bitmine both on the dip as of market close. The move aligns with ARK's strategy of accumulating high-conviction assets when prices are temporarily depressed to rebalance its innovation-focused ETFs.
All right, I'm going to keep it fairly short and concise. We do also have the story about Trump's CFTC nominee, Mike Salick. He says he intends to champion a clear regulatory path for the United States. That is somewhere down in here. It is a fairly lengthy clip, but I will link this in the description if you guys are interested in watching the full thing. The big thing I wanted to focus on was this rate cut and how the odds have actually gone down. So we were of the opinion that the rate cut would help retail and institutional, I guess, borrow more money and then put those dollars into risk-on assets like cryptocurrency. Well, the chances of that are becoming slimmer and slimmer. That's just not going to happen. That could be one of these factors that is triggering this downturn. But guys, it could be temporary. It's not showing it in the metrics right now. Ali charts here saying 190 million XRP were sold off by whales in the last 48 hours. So if you guys are still holding on to your XRP, you might be able to purchase more at a discount in a little while. These are accounts that hold between 1 million and 10 million coins. And you guys can see the sell-off is occurring fast and furiously. The Kobesi letter also came out with a statement, why are markets crashing? So our logical explanation, there is quite literally only one headline that can even partially be blamed for such a sudden market crash. U.S. Labor Department said in November and October employment situation will be released December the 16th. By this point, the S&P 500 was already down 70 points from its high. However, in the 40 minutes after the announcement, the S&P crashed another 120. We now know that the Fed is effectively entering another interest rate decision with an economic data blackout. Markets do not like information asymmetry. But is this really enough to erase nearly $2 trillion in market cap in a matter of minutes? In our view, this was just the switch that shifted sentiment. The reality is that investors are on edge in this market. When a sudden decline begins, investors rush to exit because the bubble is popping. This works in the opposite direction as well. When stocks surge, the rally accelerates quickly as capital rotates back into AI stocks because AI is the next big thing. In quotes, they put it there. The reality is that we now live in a market where any headline can drive trillions of dollars of market cap in a matter of minutes for one sole reason. Sentiment is more popularized than ever. So guys, we're getting very specific headlines. And what Kobesi letter is saying is that it is shifting market. So Adam Kobesi also did want to explain. He wanted to expand on the Kobesi letter's original tweet here. As we explained below, the entire market crash is a product of sentiment. He says investors are afraid to be the last one out. This also works in the opposite direction. That is, rallies gain momentum quickly as investors are afraid of missing the next big thing. There has almost never been a time where markets were so polarized between two seemingly binary outcomes. On top of this, markets have evolved into their most reactive and hypersensitive form in history due to constant headline fatigue. Ultimately, when you zoom out, though, volatility is just a byproduct of AI, one of the biggest technological revolutions in modern history. It's called disruption for a reason. So these guys are blaming it on a few things here. Well, market headlines, obviously, the AI craze is, Adam Kobesi is calling it the biggest technical revolutions in modern history. Some are suggesting, though, that could be a bubble, and that is definitely also affecting markets right now. So So a few things are going on, but we are seeing massive XRP outflows. Okay, they are continuing, and this chart will be key in the coming weeks. This coming from XRP Arthur. Right now, we're seeing sustained red bars, outflows, as you guys can see here. XRP keeps leaving the exchanges. That's why the price keeps sliding. But once ETF inflows start hitting the market, and he gives the names of a few here, this could turn the chart green. Well, we have had a couple of XRP ETFs released finally, and we just have not seen that kind of demand for XRP, not yet. We need more green net inflows before any real bullish reversal. I mean, that is wishful thinking, I think, at this point. Again, like I've said many, many times in the past, XRP is still trading in this speculative market. For more information, though, on market sentiment, where I think the market's going to go next, you guys can follow me, patreon.com/workingmoneychannel. It is only $5 a month. I've kept it affordable on purpose. I want you guys to be able to feel like, okay, I can spend $60 in 1 year and follow Working Money Channel because I like his opinions. I want to know more about what he's doing during this market cycle. And yes, I want to say I am profitable. Anyway, check it out if you're interested. Are you worried about XRP crashing right now? Remember, in 30 to 60 days, we may see scarcity for XRP. When that happens, nobody will even remember this crash even happened. This coming from Common Sense Crypto, so taking a bit of a more positive look at this. Escrow lockups, 37 billion locked, okay? 1 billion buyback potential, so that would be about a medium to high circulating reduction of about 1 to 2%. Then there's institutional demand. Think of this, 4 to 8 billion ETF inflows projected. That locks up about 1 to 3 billion XRP, so high float wipeout. Then the burn rate, 163 to 4,000 XRP a day, stable unless ODL surges, and that is going to be gradual. In summary, and I think this is from AI, in summary, XRP's path to scarcity is more about demand overwhelming the thin float than burns. Guys, it's going to be about the real world utility. With ETFs launching and institutions piling in, 30 to 60 days could mark the tipping point for a supply crunch, positioning XRP as one of the scarcest major assets by early 2026. This is based on current trends. Always do your own research and consider volatility. Well, I think right now, and I mean, if we're looking at the shorter term, we are still trading in spec. Another big thing is Bitcoin, of course, driving the market. And the rumors are that MicroStrategy will be forced to liquidate their Bitcoin if the price falls below $75,000. Now, need I remind you, Bitcoin here on the chart getting very close to that. We're currently trading in and around 82,000 and 74.6, 74.7. That is the bottom point right down in here. Is it true, though? Well, Michael Saylor has something to say about that.
Where do you have to liquidate? Where do you have to liquidate any MSTR?
I don't think we're liquidating. Look, we have $8 billion of debt, and we have $65 to $70 billion.
$57 billion of equity today.
Yeah. So in terms of Bitcoin would have to fall 90%
from here
for us to be sort of collateralized, to be one-on-one. At which point we probably would dilute the equity, and so it would be bad for the equity.
You would dilute the equity because you would just issue more shares.
We'd have to sell more equity. We're not going to, but the point is we're never going to liquidate.
Okay.
The equity is going to be a loser.
Yeah.
If Bitcoin fell to zero tomorrow forever, then the bonds won't come. The bonds will default.
Yeah.
Right. But a 90% drawdown, we wouldn't default.
Yeah.
Right.
That seems
so if you think Bitcoin is going to go to 10,000, I think we're good. If you think Bitcoin's going to $1 tomorrow forever, then yeah, the bonds would default. But
yes, I was in a family
that's
office.
like saying, New York City sinks underneath the ocean. If you think that's happening, your New York City real estate bonds will go bad too.
Yeah.
Well, Saylor sounds fairly confident considering the prices are cratering. And so I happen to see this video several times over there on Twitter and have it up 3 different times. I was toying with this idea of playing certain clips of this, and I am still going to obviously talk about it. The Tom Lee tracker, who is not actually Tom Lee, posted this. Tom Lee says today's weakness looks just like October the 10th, and so he explains it here. A stablecoin pricing error triggered the biggest crypto liquidation ever. Nearly 2 million accounts were wiped out, and the liquidity collapsed. These unwinds usually take about 8 weeks, and we are in week 6. Guys, Tom Lee is optimistic that we could see a big rebound. Now, I'm going to play you guys this clip here, courtesy of Cryptos Russ. It is just over 5 minutes. Tom Lee, though, does say some very, very important things in this clip with regards to this market sell-off. Listen to this.
I think the crypto market has been limping along since October 10th. because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
Okay, I will leave it there. I'm not going to play the last minute and a half, but you guys can watch this video. I will link it in the description. Cryptos didn't break, the markets did, says Cryptos Russ here. Tom Lee said the real reason Bitcoin and Ethereum have been bleeding since October 10th is massive liquidation shock. And then he also talked about this glitch. So the stablecoin mispricing, that is interesting. Triggered ADL across exchanges, wiped out nearly 2 million accounts, and left market makers short on capital, shrinking liquidity ever since. When liquidity dries up, every dip feels worse than it really is. In 2022, it took 8 weeks to flush out. And guys, now we're in week 6. So what he's saying is we could eventually see a rebound.
In 2022, we had what you would call a 6-week washout, maybe because of this, again, not using the word glitch, this software or coding problem or mistake. 6 weeks later, we know what happened. If you bought then, you made a lot of money. Do you still think we are in a washout period in an overall bull market?
Yeah, I mean, I can tell you a few things. Whether we're talking to macro funds or to crypto funds, they are sitting on piles of cash. People are sitting on their hands because they know there are these plumbing problems and these crippled market makers. They're not going to try to be heroes and step in here. So when we look at those prior corrections, even Bitcoin in the last few years, Bitcoin last year had some really ugly corrections. Each of them had the recovery, right? The rise from the low was faster than the drip to the bottom. So if we've been suffering through 6 weeks of Bitcoin falling from 125 to 88, and maybe it goes to 77, right? Maybe that's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now, because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks that are the proxy. So that's the MicroStrategy.
Okay, I wasn't going to play you guys another clip, but I did find another section that I wanted to play you guys in this 11-minute version of the same Tom Lee video posted by Fred Krueger. Those 6 weeks, you heard Tom Lee say it. After that, patient buyers are waiting on the sidelines, and it wasn't the seller's fault. They did not want to sell. So guys, could we see the trend move to the upside in another 2 weeks? Well, Jim Cramer has come out saying the consistent bullish crypto cheerleaders are due for full court press using claims of $1 million per Bitcoin by 2030 or some other magical nonsense. They need to defend themselves as they always do. Saylor due for multiple appearances. I will chat GPT what Saylor will say today. Essentially, Jim Cramer saying we're bearish. Does it mean we are bullish? We're back, boys and girls, says Anders here. Yeah, the inverse Cramer indicator would suggest that is true, that Tom Lee's theory would in fact suggest Bitcoin will move back to the upside. We could see 74,000 though in the meantime. What does this mean for all of crypto? Well, I think altcoins will rally if Bitcoin rallies. For more information though on what I think, you guys can follow me at patreon.com/workingmoneychannel. And thanks so much to everybody who's been supporting the channel through the Working Money Channel merch store. Grab your merch. Link is in the description of the video. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.